Good evening. Welcome to the ShadowTrader Video Weekly for Sunday, June 6th, 2010. This has been probably one of the most difficult weeks, I would say, for trading. I think a lot of traders would agree just simply because of the volatility and the choppy action. These is actually the last 10 days in the market. The last 2 weeks have been nothing but a grind to the side with huge volatility both ways. Once this resolves itself, then obviously the move will be explosive. I think everybody's pretty much in agreement that the next move should be down from here. But prior to Friday, if we just pull the chart back like this, one bar, I think a lot of people were in the bullish camp, and one day, boom, just changes everything, and me included. I thought that this was going to resolve itself to the upside in that basically because all of this consolidation ended on Thursday with the S&P actually going above it. We can see that there was such a strong ceiling here where the market just refused to break through, and then it did break through and close nice and high without backing off. So everybody's thought was, okay, it's going to probably, or at least my thought, I should say, maybe not everybody's, but I was thinking, okay, surprise to the upside. And then on the employment numbers, we actually got a surprise to the downside. At the same exact time as that pattern was forming in the S&P, look what happens when you drag the Qs back by one bar. It actually even broke the trend. And as we know, sometimes these leaders in the NASDAQ, they tend to act as leaders, right? NASDAQ sometimes tends to lead the S&P and the Dow. So to me, this just supported the theory. But obviously, the huge gap down on Friday negated all that. So now it does look like the next move should be down. I still wouldn't count out a really volatile counter move to the upside, although what's going on right now is that everything is so news driven. We're kind of stuck in a news cycle that is negative. Now we got this Hungary thing adding on to the woes in the rest of Europe. So it just keeps kind of getting worse and worse. So until this news cycle plays out, I don't think that we will be able to get that move to the upside. The VIX is currently confirming, I would say, equities to the downside in that you can clearly see there's this sort of band of action here between 30 and 35 in the VIX, and to me it looks like this wants to spring higher, basically. So I'm still thinking probably a little bit lower. One of the problems with looking for trades in this sort of environment is that there's a lot of candles lining up same size bodies, which makes perfect sense because if you look at the weekly bar, and when I say bars, I mean weekly bars of individual stocks, you can see that we had bottoming tail hammer to the downside, which would be bullish last week in the S&P off a support level. Then now we have inverted hammer to the upside, and a lot of this range is just the same. And they're all kind of like that. Look at the diamonds here. So that's the Dow. It's completely, I call that inverted hammers and or opposing tails, I should say. Excuse me. This current week is an inverted hammer. When it's like this, it's opposing tails. And remember that the longer the time frame, the more powerful and important the chart pattern is. So given that we have opposing tails on a weekly, that shows you very obviously that, we've had 2 weeks of crazy action, which we know we have, that has just gone kind of back and forth. That being said, however, generally the last mark on the chart, whatever is the most current bar, is the one that gets more weight. In this case, it's the bearish tail, which is the topping tail, not the bottoming tail. So we have to give it more weight, possibly that it's leading us to the downside. So those of you that are looking to set up bearish trades, which I'm going to get into in a second, you may be thinking about shorts anywhere below last week's lows with a stop over last week's highs. Honestly, if you want to hold for more than a couple of days, if your hold time is going to be measured in weeks, there's really no other way you can look at it. So you've got to have your stop right up here above where that consolidation level was in the market, right? And you enter down below. So we'll see if that does occur. One of the areas that might be getting tired and has been kind of on a tear lately, I wanted to point out, also has the same inverted hammer on the weekly as airlines. You can see they've been kind of hot lately with the plunging crude, but then there was Friday's action. They kind of succumbed to it, and that left the same weekly inverted hammer on the airline index at a lower high. So that may be something to be looking at. I'm also still interested in crude, which I told you a couple weeks back I was interested on the long side. I did not take any positions yet as the oil never really bottomed out firmly. It just had a little couple day bounce, and then actually had really bearishness on Friday, and now we're sitting at about $71 on crude. One thing I do want to point out though is as that comes into support somewhere around 70, should be between 65 and 70 regardless. Keep an eye on this Amex oil index. These support levels are really strong at this 850, and it will probably only take maybe one more day of bearish news from BP or something else about the spill, to take us down to here. I'd keep a very strong eye on this 850 in the XOI, so that's something that's on my radar. As far as regular individual stocks are concerned, I'm just going to throw out a couple because I want to give the best names, obviously, to the newsletter subscribers. REGN is something that caught my eye with huge volume here at the same time as it approached the top but was not able to break. So that's sort of a bearish divergence. When the volume is big but it wasn't able to push the stock to new highs, that tells me there's a lot of churning here, and it probably is indicative of institutional distribution where the pros were kind of selling to the amateurs right up in here as they kind of had an idea that the stock wasn't going to make new highs. And then also there's a nice trend line here, so a break of that is probably going to send the stock lower. This has some pretty big volatility on the weeklies, as you can see, so we could, it could easily go 28 to 25, which is more than a 10% move, so that'd be something to look at. Also, interesting chart pattern out there is also DTV, which is DirecTV. Same thing, increase in volume, and then wasn't able to hold it, broke out to a new high, and could easily be a short that's going to at least come down to the main trend line, and I think possibly lower. If the market continues lower, then these are trades that I'm showing you where you might be able to get good entries close to the top if this indeed does develop into further weakness, which if it does, it's very simple. You just need to be looking for a break down below last week's low on these inverted hammer patterns on the broad market. So that's that. Be very careful out there. The volatility still remains huge, as I keep saying. You must have wider stops in this environment. You should know that. Also, there's a lot to be done with options, so study up on it. Learn everything you can about options as well as stocks, because when this gets like this, think about it. Insurance premiums are really rich out there, and the richer the insurance premiums are across the whole spectrum of cycles and chains in options, the more opportunities there are. So something to think about. All right, on behalf of myself, the entire ShadowTrader team here in beautiful Philadelphia, Pennsylvania, and of course, as always, from all the good people in Chicago, Illinois, at the one and only Think or Swim, I wish you good trading and good night.